Welcome to Ask Becky Anything. Hi, and welcome to Accelerating Your Wealth with your host, myself, Rebecca Robertson. I'm an independent financial advisor and wealth coach. I'm the director of Evolution Financial Planning, who is also our sponsor for today's show. Don't forget to like, subscribe, share and review this episode. With your help, we'll reach more people who can benefit from the show. If you're somebody that is not sure what to do with their finances, maybe you're working and you're not sure what to do with the bonuses you've got at work, or maybe you started a business and you've got profits and you're not sure what you should be doing to enable you to A, pay yourself more, or B, potentially retire earlier. Maybe you're somebody that's thinking about, do I overpay on the mortgage? You've received some inheritance. You've got lots of questions around your finances and what to do next. Then check out Evolution Financial Planning, who are regulated independent financial advisors and financial planners that can help you make some of those big decisions in life. So let's see what's going on with Ask Becky today. Let's see what they're asking.
Hi Rebecca, it's Natalie. How would you advise me as a single person running a sole trader business with regards to getting my first mortgage?
Great question. Thank you so much, Natalie. So first mortgages, whether you're first time buyer, second time, third time round, then it's all about making sure that you've got a really good credit rating. So you can go on to any of the credit rating files and you can register. So I'm with Experian, there are others. And I pay a monthly fee and it will tell me exactly if there's any changes, if anyone's put any credit in my name, etc. And they can give you advice and tips on things that you can do to improve your credit score. Number one is to make sure you don't get any payday loans. Mortgage providers do not like it. You can also then have a look through your own bank statements and just have a tidy up. Have a look through your bank statements, see what's going out, seeing what you're paying for. To understand not just your budget from an affordability perspective, but also looking at, what the lender's going to look at through those bank statements. If you're a sole trader, then it's also then looking at your accounts. So obviously, the more profit you can put through the business, then the more it will look like that you are profitable, but also maybe reducing some of your expenses, meaning you'll have to pay more tax, which is a bit of a ouchy moment, but it's almost like that short-term pain for that long-term gain scenario. So looking at your accounts a little bit differently. You can go on to many of the different providers' websites. So I won't mention any names, but there's a lot of big banks out there, and you go to mortgage affordability and you can put in what maybe your last year's net profit was and the previous year. And then it will give you a calculation of roughly how much they will lend you. You can also speak to a mortgage broker. There's no harm in speaking to 2 or 3 different mortgage brokers. You can find someone local to you. Our sponsors, Evolution Financial Planning, we do have independent mortgage brokers that you can speak to as well. And by speaking to a broker, you'll be able to understand, what else should I be doing? How much do I need to put aside for a deposit? Is 10% enough? For a lot of people, I do encourage them with the amount of new builds being built is that they find their local right to buy company and they register through that right to buy scheme, so that if those new developments, as and when they're building and then developing, you'll be notified, because a percentage of those new builds have to go to a right to buy scheme, and it's literally like a first come first served basis. It might take a year or two, but that will give you then time to save enough deposit for that particular property, which with a right to buy, you only buy a proportion of it and then the rest of it is in rent. But you can then gradually scale up. You should be, part of the contract is worth checking, that you can scale up and buy bigger shares as you go, so you can chunk it in as your income increases and your business increases, for example. So I'd encourage you to do that, and then that will give you time to understand, what should I be putting through on my accounts? How much more income do I need? How many more clients do I need to take on? And so it's giving yourself that time, that run up, that sometimes your finances aren't perfect right now to make it happen right this second, but they might be in 2 or 3 years' time. And for people that have older children that are considering this, then it's all well and good. You don't necessarily need to, get your finances in the best possible place, save as much, invest as much as you can potentially, so that when the children are grown and they've moved out, then you could maybe buy something that's smaller rather than feeling the pressure of a big property with 3 bedrooms, for example, to fit all the kids in. So I hope that helps, Natalie. Thanks for the question. Did you know I wrote a book? It's called Accelerating Your Wealth. Funny enough, the same as the show, Accelerating Your Wealth podcast show. But this is 10 ways to accelerate your wealth. It was designed to really help people with their finances in a simple way. So we focus on some key sections around your money mindset, some practical things that can be done with your finances, and allowing you to maximize your money and your future. So if you're thinking, hey, this stuff is interesting, then the best next step for you is to check out the book. It's an Amazon 5-star bestseller. Yeah, I know, it's great, right? Go and check it out. You can buy it on Amazon and have it with you tomorrow for a nice cup of tea. Hi, welcome to Ask Becky Anything. Let's get going. What's my next question?
Hi, Rebecca. It's Samantha Cameron here, and I have a question for you with reference to my pension. So I currently pay monthly contributions into my personal pension, and I would love your advice to know how much you would recommend adding to my pension each month. I am 50 this year, and I'm looking to retire in the next 10 years, and I would love to do more traveling. As a business owner, self-employed, I know how important contributing to a pension is, and I love doing social media psychology and being a social media expert to those business owners that feel overwhelmed and stressed with their social media, but it's not something that I want to be doing forever. I want to be traveling more, seeing different parts of the world. So I'd love your help in how I grow my pension pot.
Great question, Samantha. Thank you so much. So the question is, how much is enough? Now, how much is enough for me or for you is completely different. Samantha talks about traveling and having quite a luxurious life. So it's really worth her working out the drawdown process as to how much she actually needs. How much is that pot? Is $500,000 enough? Is 250,000 enough? Is £1 million pension enough? How much is enough will depend on that lifestyle. But she might have a figure, an annual income in mind. So she might say, well, I know I need to have 30,000 a year, 40,000 a year to have the lifestyle that I want. So how much she put in between now and then to achieve that income. There is a website which is called Money Helper, which I believe is moneyhelper.org.uk. It is a government website, so you should see government logos down the bottom of it. If you go to a website that doesn't, then please click off it. I don't know where you're going, and it could be anywhere. Please don't put any of your data or your personal information like name, addresses into any website unless you know the bank, the institution, and check at the bottom that they're FCA registered. So you can go onto Money Helper website, which is a government website, and you can put in your pots. So you can say, okay, this is my amount that's in my pension. So you need to go and check the recent valuation. You can put in how much you're putting in each month. And you can basically say to it, well, at this point, I want it to, how much will that give me at this point? You can sort of do like a sliding scale and say, I want to take out 10%, 25%, like as a tax-free lump sum, or you can scale it to say, oh, actually, I don't want anything as a tax-free lump sum. How much would it equate to as pure income? So don't take all the money is paid as an income effectively. And then that will give you, Samantha, an idea of if what you're putting in now will give you enough income by the time you want to retire. If it doesn't, and you think actually that's not quite enough, you can just go back a few pages and you can input, okay, well, if I increase that by X, then that will, what does that then give me? So that's quite a simple way of doing things. A financial planner, so I'm a financial planner and a financial advisor. We do, as part of my regulated work through Evolution Financial Planning, we do one-off pieces of pension advice where we do these kinds of calculations for clients. And sometimes people need them more complicatedly done. So it might be that it's not just about, I want X income at X number of years' time. There might be other elements to it. So they might be thinking, well, actually, I don't know how much I need. I want to also invest for my kids, or I want to pay for my kids' university, or should I overpay on my mortgage? So sometimes the financial planning can be a little bit more broader speaking. But when we're dealing with pensions, we're often reviewing, okay, is that pension in the best place? And also, is it going to provide you with enough income? Or it might be that you've got lots of pensions all over the place and you need them to be looked at to ask the question, are they in the right place? So the other part of the question that Samantha's asked, how can I make sure my pension is going to be enough? It's not just about putting enough in, it's making sure it's in the right place in the first time. So what are the charges? What's the platform charges? What's the underlying investment charges? If you have a financial advisor, sure, they're doing a great job, but are you getting enough value for money? Or do you feel that you're getting the best advice? Are they having regular reviews if you're paying for that ongoing regulated service? And then last of all is how is that performed over not necessarily the last year, but in generally over the last 5 years, has that performed at what I would call a fair benchmark? And the benchmarks are quite an interesting one because different institutions use different benchmarks. I generally use a gauge of what are my other clients achieving across the board rather than benchmarks that institutions give me, because they can pick and choose what kind of benchmarks they feel are appropriate. So that will answer your question, Samantha. Good luck on the website. And if you do need any other regulated advice, then do get in touch with our sponsor, which is www.evolutionfinancialplanning.co.uk. But I hope that's been helpful for you today. Take care. So thank you for your questions from Ask Becky Anything. I'll be back again with another show and segment. Do send us your questions in. We'd love to hear from you. Take care. Thank you for joining us today at Accelerating Your Wealth with your host, myself, Rebecca Robertson. I hope you enjoyed the show. Do subscribe and let us know in the comments any of your thoughts.